Now speaking, Sean Collins, Director, Investor Relations. Good morning everyone. I am Sean Collins, the Director of Investor Relations at Harley-Davidson. Joining me this morning for the call are Harley-Davidson's CEO, Jochen Zeitz, CFO, Jonathan Root, and Livewire CEO, Karim Dene. For the Q&A portion of today's call, Harley-Davidson's Chief Commercial Officer, Adele O'Sullivan, will also be joining us. We will be discussing our latest financial results and providing an update on our strategic initiatives. Our comments will include forward-looking statements that are subject to business risks that could cause actual results to be materially different. We encourage you to review our latest filings with the SEC for more information. We are excited to share our progress and look forward to your questions. Now speaking, Jochen Zeitz, Chairman, President, and Chief Executive Officer. Good morning everyone and thank you for joining us today. Our Q2 results showed progress on the delivery of our hardwire strategy despite a difficult macro environment and the unexpected production suspension impacting the business. Revenues were down 2% in the second quarter, driven by a revenue decline of 4% at HDMC, which was partially offset by revenue growth of 19% at HDFS. Despite the challenges, we saw global new motorcycle retail growth of 3%, with North America up 1% versus prior year and solid international growth, especially in APAC, where we delivered a 24% increase in retail sales versus prior year. We remain focused on growing our most profitable categories versus just growing total units. We saw an improvement in our HDMC gross margin to 34.8% this quarter. We continue to selectively focus on opportunities in segments that we believe have a path to in-market success and profitability, capitalizing on our brand strength, product capabilities, and selectively complemented with partnerships. We successfully launched the X440 in India in July, with pre-orders exceeding initial expectations from launch. We introduced HD Membership in June, a new industry-leading community platform and membership program designed to enable all motorcycle riders, motor culture, and Harley-Davidson fans to connect, engage, and ride with one another while personalized benefits, rewards, and experiences. We also introduced the Fast Johnny, a celebration of muscle car culture and its racing heritage, featuring factory-direct custom paint and graphic treatments across the three Harley-Davidson models, the Low Rider Street, the Street Glide Street, and the Road Glide Street. For the third installment of the Icons Motorcycle Collection program, we launched the Electric Glide Highway King, inspired by the 1968 FLH Electric Glide model. We've seen a strong customer reception to both collections, with most selling out ahead of delivery. We also launched our first updated dealership in North America as part of the Project Q program, an initiative to redefine the Harley-Davidson customer experience, leading with footprint transformation to provide a much-needed redesign of our dealerships. We remain committed to our six-pillar hardwire strategy, focusing on profitability and desirability, selectively expanding, and optimizing the customer experience. We are transforming our omni-channel capabilities in the pre- and post-purchase journey. We continue to invest in improving our allocation and distribution model, which will improve our efficiency in the future. We are proud of several standout launches this year, including our Road Glide 3 breakout anniversary models, but more significantly, our transformational CVOs, delivering on our hardwire promise of innovation as part of our focus on core categories. We are also proud of the ongoing success of our large cruiser category, with one specific example being the Low Rider Street, which is resonating with the younger riders, showing a new path forward in the categories we proudly lead. We have partnered with Hero MotoCorp and QJ to increase ridership and bring new riders directly to the Harley-Davidson brand. We continue to invest in supporting a message of affordability but protecting profitability by focusing on our core categories. We are transforming our omni-channel capabilities in the pre- and post-purchase journey. We remain committed to our six-pillar hardwire strategy and will continue to adjust according to the macroeconomic realities that we expect to play out through the change in the business environment. Now speaking, Karim Dene, Chief Executive Officer, Livewire. Livewire is poised to have a massive impact on the electrification of the industry. The Del Mar is the first bike on the SD platform, with the core EV systems and software developed from the ground up. It has a price point of just above $15,000, making it more accessible to a broader segment of riders. Production of the Del Mar has begun in Wisconsin and the first bikes have been assembled in North Pennsylvania. Over the next 2 years, the SD platform is expected to expand. Livewire 1 is now available in Europe and the Del Mar will soon follow. Retail partners are up and running in 4 priority countries following the launch of the brand in the second quarter. The business is well financed for the next stages of development, with $260 million in cash and cash equivalents at the end of the quarter and the option to access $200 million under a non-binding term sheet with Harley-Davidson. Now speaking, Jonathan Root, Chief Financial Officer. Good morning everyone. In the second quarter of 2023, Harley-Davidson experienced the impact of an unplanned production suspension at its U.S. manufacturing operations, resulting in a 10% decrease in global wholesale shipments. Despite this, global pricing was able to partially offset unit declines, allowing the company to turn in a strong margin performance. Total consolidated HDI revenue of $1.4 billion was down 2% compared to last year, with HDMC revenue declining by 4%, HDFS revenue growing by 19%, and Livewire revenue declining by 44%. Total consolidated HDI operating income was $221 million, which was $56 million lower than the prior year. Earnings per share of $1.22 compares to $1.46 last year. In the first half of 2023, total consolidated HDI revenue of $3.2 billion was up 9%, with HDMC revenue increasing by 8%, HDFS revenue growing by 17%, and Livewire revenue declining by 35%. Total consolidated HDI operating income was $591 million, which was $24 million higher than the prior year. HDMC operating margin of 19.2% through the first half is 2.4 points higher than prior year. At Harley-Davidson Financial Services, revenue increased by 19%, driven by higher finance receivables, higher interest income, and increased investment income. HDFS operating income in Q2 was $59 million, down 31% compared to last year. Livewire operating loss of $32 million was in line with expectations and was driven by product development spending associated with the launch of the Del Mar electric motorcycle. Livewire now expects unit sales of 600 to 1,000. For HDMC, the company now expects HDMC revenue growth of flat to plus 3% and HDMC operating income margin of 13.9% to 14.3%. For HDFS, the company continues to expect HDFS operating income to decline by 20% to 25%. For total HDI, the company continues to expect capital investments of $225 million to $250 million. The company also continues to prioritize funding growth of the hardwire initiatives, paying dividends, and executing discretionary share repurchases. Robert W. Baird & Company analyst Craig Kennison inquired, "What is the strategy in India for the company and what is the market size and economics of the licensing arrangement with Hero?" Johan Zeitz replied, "Yes, Craig. We exited India in 2020 and entered into a license agreement with Hero Motor Company. This agreement provides us with license income when Hero ships bikes with minimum quantities per contract. We view India as a long-term opportunity, as the premium segment we operate in is relatively small. We are now entering this segment with our partner, Hero, offering competitively priced bikes. This has led to a lot of enthusiasm in the market and provides an alternative to the monopoly that has been in place. We believe this will provide a broad opportunity in terms of units sold, and we are pleased with the reception since the launch." Bank of America Merrill Lynch analyst Robbie Ohms inquired, "What are the U.S. retail trends, dealer inventory levels, and motorcycle revenue declines for the back half of the year, and how will the timing of new CVO shipments impact U.S. shipments?" Johan Zeitz replied, "Yes, I'd be happy to. In terms of what we saw in Q2, we saw a continuation of the trends we saw in Q1. We saw strong growth in our core markets, with revenue up 10% year over year. We also saw a continued focus on cost control, with expenses down 5% year over year. Overall, we are pleased with our performance in Q2 and are confident that we will continue to deliver strong results." Adele O'Sullivan replied, "Thank you, Robbie, for your question. In Q2, North American retail saw challenging trends due to inflation, rates, and affordability. Additionally, a production suspension late in the quarter impacted our retail performance. However, we saw growth in our core touring, trike, and softail categories. We are also pleased with the reception of the CVOs, which will come into full force in the back half of the year. We are managing and monitoring inventory closely to prioritize the right units and smooth out any lumpiness resulting from the production suspension. We want to ensure healthy levels of inventory and protect 2024 by managing a cadence of supply that is in line with our objectives." Wolfe Research analyst Fred Whiteman inquired, "Can you provide an update on the full-year retail outlook and the revenue build for the year? How do you see units mix and price impacting the outlook?" Johan Zeitz replied, "Overall, it depends on how the third quarter turns out, which is reflective of our ability to ship the right bikes to the right dealerships. We are currently addressing an imbalance caused by disruption in our production facility. At this point, it is not advisable to comment on retail trends." Jonathan Root replied, "Thank you, Fred. Our revised forecast includes flat to 3% revenue growth, with wholesale unit decreases of 1 to 3%. We anticipate 1 to 2 points of mix and 1 to 2 points of pricing to offset moderated inflationary outlook. Additionally, we expect our P&A and A&L businesses to continue to grow year over year." Raymond James analyst Joe Altabello inquired, "Could you quantify the impact of the shutdown on shipments and retail in the quarter, particularly the impact of the discontinuation of Sportster?" Adele O'Sullivan replied, "Thank you, Joe. We can't pinpoint the exact impact of the production suspension on our inventory levels with precision. However, we know it has caused some imbalance in the network. We believe it was a factor in the back half of June. We are working to bring back inventory in the right order and priority to support retail growth in the second half of the year. Citi analyst James Hardiman inquired, can you provide insight into the right level of inventory for the end of the year, given that retail is down compared to 2019? Adele O'Sullivan replied, thank you for the question. We look at our inventory levels through three lenses: total number of units, days of coverage, and historical trends versus actual sales. Our estimations show that our inventory is much lower than the decline in sales compared to 2019, which is in line with our strategy of being more prudent with our inventory and protecting desirability. We will continue to manage this balance throughout the year, with higher levels to support the riding season. We will monitor our inventory through these three lenses, looking forward into 2024 and relative to historical levels. We intend to remain on strategy with a lighter inventory load, even with declining sales compared to 2019. BMO Capital Markets analyst Tristan Thomas Martin inquired, what levers can you pull to influence retail demand, and what kind of promos should we expect going forward? Adele O'Sullivan replied, thank you for your question. In Q2, our focus was on two main areas: driving traffic to our dealers and providing promotional rates and trade-off promos to make our products more affordable. We increased our marketing investment to generate leads and traffic to dealers, and held successful open houses. We also looked at promotional rates in conjunction with our dealers to address the upgrade cycle of our most loyal customers. We will continue to manage desirability and look at these levers in the back half of the year to address production and inventory imbalances. KeyBank Capital Markets analyst Noah Zatzkin inquired, could you provide an update on the HDFS guide and what we should expect for the second half of the year? Jonathan Root replied, thanks, Noah. Our HDFS guidance remains unchanged for the year. We're confident in this outlook due to changes we've made in our servicing activities, such as engaging with late consumers, using better technology and AI to monitor our call activity, and increasing our take rate following the Fed actions. We're also seeing improved revenue from commercial lending and fee income products, such as visa protection products and insurance. Longbow research analyst David McGregor inquired, could you please provide an update on the Rider Academy's conversion rate, specifically the number of graduates who purchase a bike compared to last year? Are there any changes in preferences for new versus used bikes? Johan Zietz replied, the Riding Academy in the first quarter was down due to weather-related issues. Courses were fully booked, but the weather hindered the ability to hold them. We anticipate that if the weather improves, bookings will remain strong. Adele O'Sullivan replied, we continue to see a strong conversion rate from our Riding Academy classes, with new-to-sport riders well distributed between new and used motorcycles. We're seeing conversions across the full range of CCs, from smaller to larger motorcycles, including our touring range. Morningstar analyst Jamie Katz inquired, could you please explain the protocols you have put in place to ensure the quality of your supplier's products, and clarify if EV is back on track with the Del Mar startup and shipping cadence? Johan Zietz replied, yes, we have a comprehensive quality control system in place. Last year and this year, we identified two separate issues from a Tier 2 supplier, which is monitored by our Tier 1 supplier. We have a chief quality officer and clear protocols for controlling quality during production and after products are in the field. However, we cannot control every component from Tier 2 suppliers. The Tier 2 supplier and our Tier 1 supplier must also provide a level of control. We found the issues through our Tier 2 and Tier 1 supplier and have a clear process for maintaining quality. Kareem Dene replied, good morning, Jamie. We are pleased to report that production of the Del Mar has begun and we anticipate ramping up production in August. We apologize for the delay, but are now back on track. D.A. Davidson analyst Brandon Rawl inquired, do you expect a shift in product mix in the back half of the year due to dealer inventories? Adele O'Sullivan replied, thank you, Brandon, for your question. Our main objective is to prioritize timelines with lower coverage or customers awaiting their bikes. We've seen increased interest in our trike lineup, particularly after its successful launch this year. We're aiming to be precise with inventory levels domestically and internationally, and the mix of units, focusing on customer orders and families with the best combination of demand and lowest inventory. This will remain our priority in the back half of the year.